The fact that that's all happening shows you that crypto is never going away. And I think the more it gets regulated, the more institutional assets flow into this asset class. As far as crypto goes, and Roy and I are obviously focused on that, I don't think that matters as much as this, what I call 4 vectors of policy coming at crypto right now. Let me walk just through the shopping list. So this is also unprecedented. Number 1, you got the Loomis bill, and it's mostly positive. I've read it. A lot of positive policy in that. Number 2, you've got the executive order from Biden that says we must embrace this and regulate it. Also good news. It could have gone the other way. He could have said we want to make this illegal. Number 3, you've got the SEC talking about carbon audits, and I'll get to that in a moment. That just happened last week. And number 4, you've got this remarkable situation coming out of BlackRock, the world's largest money manager, decrying and talking about Bitcoin mining and carbon credits not aligning. And I think there's a lot of policy in all of that. I think the reason we own so much Bitcoin and Ethereum right now and 32 other positions is I believe this sector will be the 12th sector of the S&P, as you pointed out earlier. And I believe that you want diversification. When I own a sector like energy in the S&P, I have no position more than 5%. Well, I have 32 positions on. And my view is simply that Bitcoin is not a coin, it's software. Ethereum's software, POLYGON software, SOLANA software. All of this stuff is software. So I'm just investing in software development that has the potential to provide productivity, and the market will value it based on its scarcity in the case of Bitcoin, or the proposal of economic increase, like a Polygon, reducing fees and friction, and HBAR being used by Boeing for supply chain management. All of these different scenarios. I don't know which one's going to work, but I don't need them all to work. I just need a few to work, and I'm going to make a ton of money. That's the way I look at it. And I would add this, regardless of what you think your target price is, if it does become an indexed asset, and I think once the SEC mandates it, it will, the volatility will decline dramatically, because what happens in an indexing model is when prices decline and your weighting is 1.5 basis points or 150 bips, you simply buy up to your 150 bip maximum. And when prices exceed that, then you trim back. But that provides tremendous stability for any asset. So you find that stocks that get indexed, or assets that get indexed, all of a sudden prices go up and stability becomes part of what their story is for a very long period of time. Now, I'll add that the Canadian regulators, specifically the OSC, in the last 2 years has been extremely enlightened. What I believe, and this is a personal opinion, and I've said this before, but I believe that all the regulators talk to each other practically every day. But there's a special relationship between the OSC and the SEC, because they regulate markets that are so similar in nature. And so I believe that whatever is going on in Ontario has already been quasi-approved by the brethren at the SEC, and they're using Ontario and the Canadian provinces as guinea pig states to try these ideas out. And what ideas are those? The first ETF with the underlying asset, real Bitcoin. The first ETF with the underlying asset, Ethereum. The very first global crypto exchange attached to a dealer broker license, both sides regulated. That was extraordinary. That was called BitBuy. I know that one because just a few hours ago, WonderFi acquired 100% of it. So now WonderFi, which has decentralized finance, has combined with centralized wallets. That's never been done before. In addition to that, the OSC has made the order by which that was licensed public. Many other jurisdictions are reading the 300+ page document and using it as a blueprint for other jurisdictions like the United Arab Emirates and Brazil and Switzerland and England. So those regulators are marching ahead, making the assumption that there will be SEC policy. So if you're an investor now, like I am, and clearly Roy is, we take our positions pre the stabilization of indexing by institutions. Why? We'll be rewarded for taking that position now. And when it happens, I don't know. Could be 6 months, 12 months, 18 months, 24 months, who knows? But when it happens, prices are going nowhere but up. And here's why I argue to investors and institutional investors why it's a good thing that there is proof of work. I'll walk you through it, all right? In America, 85% of the dams that were created in the last 150 years contemplated turbine power. However, 85% of them, the turbines were never installed. Now, whose economic interest would it be to go back and install those turbines to get access to 100% carbon neutral power? I'd argue that is going to be capital that would set up data centers and mine Bitcoin with 100% hydroelectricity. In fact, that has actually happened already. The capital that actually did that was sovereign wealth out of the Middle East in Norway. They've built out a facility on its way to 300 megawatts, and we'll see that. I think they're up at 40 already. They have been hashing coins since December. It's the new model. They call it the Norway model, 100% compliant. And the actual institutions are not allowed to own Bitcoin that actually funded that thing. But they're keeping every coin they're awarded on the balance sheet. And they've done one thing else, which I think will become part of the new model. And I'm arguing now for why capital will pursue this. They've been able to figure out a way to take the network awards that you can never allocate to where they came from. They could come from China, wherever, and actually remove them as what they call slag from the coin that was awarded. So what is sitting on the balance sheet of that company called BitZero, it's their first facility, but they're contemplating ones in upstate New York, Tennessee, Montana, and the amount of capital they're going to burn up doing this is hundreds of millions of dollars. But it's there from institutions that are taking their money out of the public stocks that are going to get audited. So I'm arguing that Bitcoin mining is good for sustainability. It's good for longevity. It's good for productivity. And it's going to do something that's really important for America. It's going to put those turbines back in those dams because that's the number one use. And then they'll let the communities use excess power when it's needed. I think this is a good thing. And this is going to be one of the big topics that you're going to hear about at Bitcoin 2022. In fact, there's multiple keynotes around this whole issue because of the squeeze happening right now on this ESG thing. And ESG has to be dealt with. The private sector, the public sector, the president, the Loomis, all of these bills, the SEC, they're coming down hard on carbon and carbon audits. And it's going to affect this industry in a really, I argue, positive way. Except if you're an existing Bitcoin miner that is using carbon credits, then you're screwed.